Welcome to today's Explainer. We're diving straight into the three massive tectonic shifts, literally reshaping the world as we head into 2026. Think about it. We're at this fascinating intersection right now where unprecedented tech capital, sweeping political blueprints, and the stubborn everyday realities of the economy are all crashing together.
Here is our roadmap for today. 1. The AI infrastructure arms race. 2. Global markets react. 3. The Project 2025 blueprint. 4. Global ripples of U.S. policy. And finally, 5. The retail consumer reality. Let's get right into it.
Section 1. The AI infrastructure arms race. We've got to start at the top with the sheer staggering scale of the AI infrastructure boom. The capital flowing right now is absolutely unprecedented. Alphabet just announced a massive $80 billion equity offering to fund their AI compute infrastructure. But wait, here is the genuine surprise. A $10 billion anchor investment for this is coming straight from Berkshire Hathaway. Right when Warren Buffett's famously disciplined, historically tech-averse holding company writes a $10 billion check for AI, well, that sends a massive, glaring signal to the entire market about the durability of this boom. Now, the market is pretty sharply divided on how to interpret this Alphabet move. There's a real tug-of-war here. On the bearish side of things, investors are looking at a 1.8% equity dilution stacked on top of a $100 billion debt load. They're worried that $180 to $190 billion in 2026 CapEx is going to seriously compress near-term free cash flow. But flip it over to the bullish read, Google Cloud's backlog has absolutely ballooned to over $460 billion. That's a 63% year-over-year growth. So the bulls are arguing, hey, this isn't worrisome dilution at all. It's just a company openly admitting that enterprise AI demand is literally outpacing their available compute supply. And Alphabet definitely isn't the only player setting new benchmarks here. Broadcom just set a brand new bar for custom AI compute. They're guiding for an astonishing $10.7 billion in Q2 AI semiconductor revenue alone. The market is no longer looking at Broadcom as just some quiet component supplier. No, they are being graded directly on the price of custom AI compute. So you might be wondering, just how dominant is Broadcom in this specific layer of the ecosystem? Well, they command a whopping 72% of the data center custom accelerator market. That puts them leaps and bounds ahead of the competition. By pulling in $5.1 billion every single quarter just from these custom chips, they've positioned themselves as the undisputed toll road for AI hyperscalers. If you want to play, you've got to pay the toll. And honestly, this dynamic perfectly explains why the companies actually building the AI models are urgently moving upstream into hardware. Take Anthropic, for example. Frontier model builders like them are partnering up with Google and Broadcom to secure dedicated compute supply, co-develop custom ASICs specifically for inference workloads, and ultimately reduce their heavy dependence on NVIDIA's pricing power. For the tech sector right now, getting your hands on compute isn't just a procurement task anymore, it's an absolute strategic survival asset.
Section 2. Global markets react to AI.
This relentless capital expenditure on AI isn't just a localized Silicon Valley story. Not at all. It is physically lifting international markets. Just look over at Japan. The Nikkei index recently surged past 68,000 points for the very first time in its history. That is a staggering record high, and it's being directly fueled by AI-related momentum, completely powering through broader geopolitical tensions. When we break that index down, it becomes super clear who's actually doing the heavy lifting here. Semiconductor equipment manufacturer Tokyo Electron soared 13.4%, memory card maker Kioxia jumped 7.2%, and Advantest climbed 5.1%. It's kind of fascinating when you think about it. These semiconductor players are single-handedly driving an entire nation's record index gains.
Section 3. The Project 2025 blueprint.
So while tech giants are busy trying to reshape the digital world, political coalitions are simultaneously aiming to drastically reshape the administrative one. Looking strictly at the source material provided by the Heritage Foundation, Kevin D. Roberts, their president, states an explicit goal to defeat the anti-American left at home and abroad. This frames the foundational objective behind this coalition of over 50 conservative organizations, which is aiming to completely restructure the administrative state.
To actually execute this, the coalition has built a highly structured, bureaucratic blueprint that rests on 4 distinct pillars:
Pillar 1 is a massive, 920-page policy manifesto. Pillar 2 involves creating a recruitment database that utilizes a mechanism called Schedule F to replace current civil servants with vetted loyalists. Pillar 3 is a presidential administration academy to formally train that personnel. And finally, Pillar 4 is a secret playbook of draft executive orders mapped out for the first 180 days in office. It's essentially a comprehensive top-to-bottom plan for restructuring governance from day one.
Section 4, Global Ripples of U.S. Policy.
Let's look at how these proposed domestic shifts are explicitly designed to alter the global landscape, starting right with the environment. The blueprint proposes a complete reversal of current climate policies. It calls for the repeal of the Inflation Reduction Act and its green energy tax breaks, the outright elimination of NOAA, and withdrawing the U.S. from both the Paris Agreement and the UN Framework Convention. In their place, the plan recommends maximizing offshore oil and gas leases and restarting coal leasing to achieve what they refer to as full-spectrum strategic energy dominance.
Switching over to defense and security, the proposals represent a radical pivot toward a highly expanded military posture globally. The blueprint outlines refocusing the Department of Defense solely on warfighting, with a specific emphasis on defeating the Chinese Communist Party. It also suggests absorbing the Department of Homeland Security into the Defense Department for border control, increasing the Army's force structure by 50,000 personnel, and noticeably expanding the U.S. nuclear arsenal so it can deter Russia and China simultaneously.
Okay, so between multi-trillion-dollar tech investments and sweeping 900-page political doctrines, how does all of this actually trickle down? How is the everyday person, the one swiping their card at the checkout line, actually holding up right now?
Section 5, the retail consumer reality. To figure out where the money is actually flowing on Main Street, we have to check the Q1 2026 U.S. Retail Scorecard. Out of 188 tracked companies, 175 have reported, and a massive 74% of them actually beat analysts' earnings expectations. Only 23% missed. The absolute crucial takeaway from this data is that despite all of that high-level macro noise we just talked about, the U.S. retail consumer remains incredibly resilient, driving a blended earnings growth estimate of nearly 27%.
But peeling back the layers reveals a deeply divided landscape. It's kind of like a tale of two shoppers. On one side, you've got higher income resiliency. Shoppers there spending heavily, pushing Macy's same-store sales up 3%, which was largely led by a massive 10.2% jump at their luxury Bloomingdale's brand. On the exact opposite end of the spectrum, extreme value hunters are driving growth at discount spots like Ollie's Bargain Outlet. Their 1.7% comparable sales increase is driven entirely by consumers just filling larger baskets to maximize their value per trip.
And we can see this divergence even more clearly in the forward-looking expectations for Q1. Value-oriented operators are massively overperforming. Five Below is expecting a huge 16.6% growth. Meanwhile, domestic demand for full-price, premium activewear brands is softening. Lululemon, for instance, is expecting a slight dip of 0.7%. So the consumer is absolutely still spending, but they are becoming intensely selective about exactly where that money goes.
So as we wrap up today's explainer, I really want you to consider the intersection of all these events. Between the multi-trillion-dollar AI infrastructure boom, the sweeping Project 2025 political blueprint, and the stubborn resilience of the everyday retail consumer, which of these macro forces will ultimately define your 2026? These three seemingly disconnected forces are silently shaping the immediate future of your portfolio, your government, and your wallet. Thanks for hanging out with me for this deep dive, and as always, keep your eyes on the data.
Thank you for watching. Please like and subscribe to our channel.